All right, so good evening, everyone. Welcome to Bursa Malaysia webinar series, and thank you so much for coming. My name is Shane. I am the moderator for this webinar. Yeah, so we are doing this live now. So you can see PC is on the screen now, and I didn't turn on my webcam. Maybe I should turn it on for a bit. Let me see if you can see me. Hi, yeah, that's me. So, but in order to save the bandwidth for today, we are going to turn off our webcam so that we can have a smoother internet connectivity. All right, so just turn it off.
Okay, done. Thank you, Shane, and thank you to all listeners who are tuning in. Um, let's talk about investing in turnaround stock. Today, we'll discuss about the definition of a turnaround stock and understand the characteristic of turnaround stocks, how deterioration can occur in a company, learn the risks and rewards of investing in turnaround stocks, learn to identify turnaround stocks, and learn to select those with the best possible chance of survival. Now, definition of a turnaround stock. It is a stock of a company which has entered into a phase of weak performance, but has the potential to change its course as management arrests issues affecting its performance, and or a change in circumstance or government policy that will alter the company's fortunes positively. Now, one very good example of a turnaround stock is the on the international scene is actually Nokia. Although Nokia now is not doing too well, but during the 1990s, Nokia used to be a furniture company, nothing to do with mobile phone, and then they shifted over into the mobile phone business. So that's why sometimes a turnaround company may actually change its business model altogether. So characteristics of a turnaround stock. There are three stages of a turnaround stock. On the very bottom, it is the earnings weakness and rapid deterioration. That's when the company, after many quarters of failure to beat expectations or many quarters of losses, then we see rapid deterioration of the stock price. Yeah, the share price would drop quite drastically as investors bail out of the company, losing confidence in the management of the company. Now, this after a prolonged situation, there may come a circumstance where there could be a change in management, okay, or a change in the business model, and that is the second phase where there will be execution of turnaround plans. Okay, normally during this phase, the management would come out to be very proactive, and they would highlight what's been done. Okay, detail their execution plans as well as completed plans to the investors, so that the investors would once again gain confidence in the company. Yeah, and then the last stage would be improvement and monitoring. Once the execution of plans are very fruitful, okay, the management then would have to look for further improvement from the base as well as monitoring results, so that they are able to improve the company much further. So these are the three main stages, okay, of a turnaround stock. Now, stage one, there'll be weaknesses across the board, where there will be weak earnings or losses over a long period, poor cash flow from operating activities. Okay, despite company, sometimes we see company being very desperate. Okay, they double down on their debt. Okay, to expand the business. Okay, but it could be that the business model is in a sunset industry, and then despite what they are doing, the company would not be able to turn around. Yeah, so this would during that stage, the company would often have poor cash flow from the operating activities. Yeah, and then there'll be poor balance sheet, which may require further fundraising. Okay, you will see that the current liabilities are very high. Okay, but the current assets are not enough to sustain. Okay, that commitment over the 12-month period. So that's why they will require to raise fund, or they will issue new shares, and this would actually push the company share price even lower due to dilution. And as the share price continue to depress versus the peers in the same industry, investors would actually bail out. Okay, that company will be shunned by all investors. So this is the stage one, where we see very often. And one example, again, if you all remember, Kodak used to be a very well-known film company, but when they failed to change into digital, okay, Kodak eventually declared bankruptcy because their turnaround plans didn't work. Yeah, so some international examples here, which I share. And stage two, execution of turnaround plans. Now, during this stage, a new management could come in, okay, or there could be a new investor, sometimes called a white knight, okay, that comes in, and there'll be fresh capital injection, okay. That sometimes it may not necessarily be fundraising, borrowing even more debt, but it could be someone who is coming in, okay. There may be a major dilution, but that person, that investor is actually putting his money into the company to secure a substantial amount of the shares. So this is of course will cause dilution, but then when you have a pedigree investor, okay, or well-known investor coming in to take a substantial stake in the company, then you would see that confidence would start to come in, okay. And also during this stage, okay, the management would have to, if let's say the major investor comes in, the management would have to allocate, a place for the new investor in the board, yeah, in the board of directors, if let's say his stake is very substantial. Yeah, and then the next stage would be about reducing debt and liabilities, because often poor cash flow and very poor ratios and very poor balance sheet is a result of a company being overburdened with debt, okay, and the assets are insufficient, yeah, to actually meet that kind of liabilities, whether it's current or on a longer term basis. So it could also comes with a change in management, okay. Certain the older management, okay, including those from the maybe the CEO or CFO, okay, or COO, may be asked to leave the company, okay. And during this change of management, new blood would come in with new ideas and new dynamism, okay, to put into the company. So it is also at this stage that the management will unveil turnaround plans for the business and set deadlines for execution of plans. So when during the turnaround stage, it's very important for the management to detail to the investor what they are going to do, how they are going to do it, and the deadline when they will do it, and what is the outcome that they are expecting, okay. Now, if you have a company that changes a management, a company that changes the management, but the management is, instead of arresting the problem immediately by detailing the plans, but they are dragging their feet, okay. For example, this company has a new change of management, but the management did not immediately come up with plans within the fastest time possible, then it goes to show that the management is also dragging their feet and therefore may not be able to execute the plans that are required to turn the company around, okay. Very importantly, the management must be very proactive towards the investors' needs, such as information, and it's very important for them to make the necessary announcement of successful executions of plans within the specified deadline, Okay, it's no point that the management detail a plan that says that we are going to reduce our gearing, by 50%. Okay, but then the what happens then is that they have this plan, but they did not specify when they want to do it. Okay, so then it becomes a wishful thinking. Okay, so if there's a deadline, then investors must hold the management to that execution within that deadline. So if that deadline expires without any execution, then that would also show that the management is very weak in implementing their plans. Yeah. So look for first signs of improvement in income statement, balance sheet, and cash flow position. Now, these are the very beginnings, okay, of the company moving away from its deterioration state. During stage 3, there must be consistent improvement in the income statement, balance sheet, and cash flow position. There's no point that in one quarter, the company actually managed to turn cash flow into positive, income statement have a revenue that grow, instead of negative growth, they have positive growth. Balance sheet ratios are improving. Okay, but then the following, after the first 2 quarters, the third quarter, it started to deteriorate back again. So to be able to become really a turnaround company, okay, there must be consistent improvement throughout, okay, and not that is haphazard. Sometimes it's up, sometimes it's down. Okay, and very importantly, that the management are dynamic enough to realize that the immediate target has been reached. Okay, they have executed their plans within the specified deadline. Now's the time the management to become brave and revises their targets on the upside. Okay, if let's say, because the company is starting from a very low bottom, by right, every increment will actually push the company away from that bottom, and therefore, it should be continuous revision on the high side. But if management suddenly become very conservative, and the company has not moved away from that bottom, then it goes to show that management are not very dynamic, okay, and they don't have a clear-cut a long-term plan to push the company further and further away from the bottom. So at the end, okay, if everything falls into place, the company must come out of its predicament stronger and with improved efficiency. That will then translate to better earnings, okay, and better cash flow position. Now, why invest in turnaround stocks? Of course, it presents the ideal opportunity for investors who have a contrarian view and the patience to see their investment comes into fruition, which in some cases could be in high multiples of the original price. Okay, now this means to say that if let's say that company has been in the doldrums, but somehow you feel that due to changing circumstance or changing government policy or a management that is beginning to show some signs of improvement, therefore you decide to become a contrarian, okay, whereas other people would actually not touch this stock, you come in and start buying it at the low price. Okay, so when the company is at the very low price here, and then you start to see that improvement are in place, then the share price will actually move higher. And as the third stage, okay, of the turnaround situation, yeah, it becomes very profitable. Then it could be on the high multiples of the original price because you buy it, okay, because you bought it near the bottom. So that is the advantage, okay, in investing in turnaround stocks. But that's also the risk because you do not know whether the first sign of improvement is going to be long lasting or not. So therefore, it's very important for you to weigh your risk, okay, and not to go too heavily into it, okay. You can accumulate gradually, okay, and as things improve, you increase your investment into that company. So one thing we need to understand is how a deterioration in a company can occur. Now, sometimes it can occur when there's a prolonged bear market in a specific industry or market, which results in the company delivering poor earnings. For example, a prolonged raw materials bear market that impacts both the raw materials industry and dry bulk business. Okay, as you are aware of, okay, during the severe bear market in the raw materials industry, the Baltic index actually fell to less than 300 points, and therefore impacting the dry bulk business. Okay, and a lot of shipping companies that are in the dry bulk business suffer tremendous losses because the Baltic index is a measurement of the shipping rates that people are willing to pay, okay, to ferry the goods to another place. Okay, when it's when it falls to less than 300, it means that people are not willing to pay that kind of shipping rate, okay, and therefore those shipping companies do suffer heavy losses. Yeah, there was a time when the Baltic index was above 10,000 points, okay, and then when you see that it drops below 3,000, 300 points, that's 90% fall in the shipping rates. Yeah. So the other thing is the failure of the commodity to change with the times, such as a move into the digital age, and I shared with you just now Kodak, okay, or a change in consumer preference which affect the company's business model. Now, sometimes certain companies, they believe that, they have been doing the same business for decades, okay, and then, they become very complacent, yeah, and they believe that their business model need not change because it has been proven successful in the past. But because we live in such a fast-moving world right now, because that's the internet, that's the discovery of new technology, new payment system, okay, and currently the hottest thing is actually cryptocurrency and blockchain, yeah, which they say is going to be the next big thing after the internet. So when you have this kind of change in technology, okay, some company still maintain the same old business model, then you may see that people will flock to a company that's offer that kind of better service and efficiency versus previously, and therefore that company would fail. Yeah, because technology changes very fast. Okay, and if a company is not able to change in line, they can also fail. Now, the other thing is poor management, okay, especially management who still believe in the good times, but not having the vision to see further into the future, okay, and therefore we say that the management has fallen behind the times, okay, due to over complacency of previous successors, or a lack of wisdom and vision to see a company through difficult times. So sometimes we have management who are very gung-ho, when times are good, okay, then they start to take up a lot of debt, okay, and then they want to increase the business as through expansion and acquisition, especially acquisition through debt. But then accumulation of debt somehow or rather is not free money. Further down the road, the company will have to pay. So sometimes a company management would feel that by acquiring a bigger company, okay, by using borrowed money, huge amount of debt, okay, that bigger company would actually help them to expand their revenue base and net profit. But sometimes it's not that case, okay, especially if they are fighting with a few different type of few competitors to acquire that company, so they might overbid in price. Okay, so there are circumstances where a company may overbid, okay, they may overbid in acquiring a company, and on top of that, sometimes that overbidding, you pay a high price, but you also absorb the company, the company's debt. So when this happens, and when climate change, business climate change, then that company would be able to would see that not only is the revenue falling, but they already incurred such a huge borrowing cost. Yeah, so that's why sometimes management, they keep on looking at expansion and acquisition, but they fail to detect something that could actually shake the economic environment and may cause them to not realize the kind of intention that they wanted to see by acquiring another company. Yeah, so very importantly, management must be able to balance the risk. Okay, but some management are too gung-ho, and then later that company, falls flat on its face. So let's look at the commodities bear market, and in this example, we look at MAYBULK. Now, this is the Bloomberg Commodity Index. Okay, based on a 5-year chart. Okay, you can see that this is the almost 2-year bear market. Yeah, in the commodity prices. But then you look again at MAYBULK. Now, again, MAYBULK is involved in shipping raw materials, the dry bulk business. Yeah, you can see that the trend line is almost quite similar to the commodity index. Yeah, so if let's say you are interested in MAYBULK, the two things that you must always look at. One is the commodity index. The other is the Baltic index, because if the commodity index dictates a higher price, then likelihood the Baltic index would actually move higher, and therefore, that could indicate that MAYBULK could achieve better revenue moving forward. Okay, you can see that it's almost identical. Yeah. Now then we see this uptick here. Okay, and then there's another uptick here, but now it's moving along this range. So we have to ask ourselves, is this a turnaround? Okay, so later we will analyze and see whether it is worthwhile or not to study MAYBULK as an option for investment. Then let's look at technology and M3 Tech's business model. You see that M3 Tech is also going down. Okay, and then there's some signs that it's moving up. Okay, again, okay, we have to ask whether this is a turnaround or not. Now, one thing is that M3 Tech provides multiple mobile platforms for the consumer besides sales of technology-based equipment. Now, technology is something that is very different, because anyone who is in the technology business, especially M3 Tech, you are not only competing with businesses, okay, that's within Malaysia, but you are competing with world of giants within the same industry. Now, for example, okay, if let's say M3 Tech offer mobile platform, okay, there are bigger companies that offer mobile platforms, okay, that are free, okay, and then between one that is paid and between one that is free, again there'll be competition. Okay, just as in terms of e-commerce, okay, like right now Alibaba is coming in very big into Malaysia. Okay, so will Alibaba take up very big percentage of the e-commerce segment in Malaysia, and therefore affecting the smaller players? Because when giants come in, okay, competition will be very keen, and if let's say our local company cannot compete with the bigger giants when they come in, then you will see gradual decline in terms of revenue and sales. Okay, just as an example, to digress a bit, you can see that in the retailing sector, okay, for example, clothing, we have H&M coming in, we have Zara coming in, okay, then we have a number of other brands overseas that have moved into Malaysia. Now, then you compare whether one of Malaysia's better well-known brands, let's say Padini, have Padini actually moved outside of Malaysia into, like H&M is from Sweden, have Padini moved into Europe or not? Okay, when the local company cannot move overseas, but you have overseas moving into the local industry, then likelihood you will see that there'll be a lot of competition. Okay, and the opportunity for that local brand to grow further, okay, would be rather limited once they've reached a certain critical mass, unless they move away, okay, to look at newer markets, because all the big brands are actually coming in, and they come in very strongly. Yeah, so this is something that for you to think about. Yeah, so financially distress, delisting, and bankruptcy. Now, these are the feelings of the management. Okay, if a management says at any time that the company is where it is in its poor state is due to circumstances, then that management should not be running that company. Okay, because if a company ever becomes financially distressed and facing delisting and bankruptcy, it's never the circumstance that caused it. Rather, it's the failing of the management. Because if the management have the foresight, they would be able to make prevention or prepare for a circumstance that suddenly arise. Make preparation for a circumstance that might arise, and when that circumstance arise, they have in their plans how to effect corrective measures, okay, to turn around the situation. So always remember, the company is not a victim of circumstance, but of management failure to address weakness and the potential dangers that lies ahead. Okay, so the management may say a lot of things, okay, but that is actually putting the blame on others, okay, but not themselves. So among the causes is management concept of listing is to earn a quick buck and using public funds for personal gains. Okay, so this is quite common to a lot of companies, yeah, especially I think not only in Malaysia but other places as well, even to that extent in US. Yeah, so management wants to list a company, okay, because they want to make a quick buck. And after they list the company, they would use the public funds, okay, for personal projects. For example, they use the public fund for construction of their of a plant, okay. But then someone in the board of directors owns a construction company, and that project is given to that to that director's company. So that's why this is called siphoning of public funds, yeah, which is not good. Then there's over indebtedness because the cost of borrowing is cheap but beyond the company's ability to pay. So especially during the normally during the economic crisis, the bank would actually lower interest rate. So then companies would go on a borrowing binge, okay, because they have cheap credit. So they borrow a lot of money, okay, in thinking that, okay, this would help in their cash flow and so on. But once the economy starts to recover, normally the bank will actually increase interest rate. Then if the company is unable to service that they borrow at a higher interest rate to pay for that which they borrow at a lower interest rate. So this could actually happen. Then we have management whose focus only on the stock price action and not on the more basic stuff such as the equity, revenue, and net profit growth. Okay, so for example, previous webinar we talk about Nestle. Okay, Nestle have a very poor gearing. Okay, their debt to equity ratio is more than 2. Okay, then because they have a tremendous debt, therefore their equity is very low. But when they announce their result, okay, their return on equity is very high. It's about 100%. So, but then it based on a very small equity. Rather, because the management just want to wants to tell people, hey, you know, our stock pays a very good dividend. Okay, our return on equity is very high, and therefore the price now is at 88 ringgit. Okay, but then if the equity is very small, by right, the management should actually grow the equity so that eventually your debt to equity ratio is down. Okay, and you know, rather than just focus on return on equity. Of course, the revenue and net profit growth is just as equally important because it has to do with the company cash flow. Okay, and also retained profits can actually help increase the equity. Yeah, so that's why sometimes management, whatever they do, is just to boost the stock price. Okay, so for example, we have situation whereby, you know, previously there's a company. One example is that company is actually losing money and the share price is not doing too well. Then that company suddenly announced we are going to pay a very good dividend. So then the next question is, if you are losing money, where is that money coming from to pay the dividend? Okay, so by right, if you have positive earnings, then only you get you have a certain percentage of the earnings to be given as dividends. So when you have losses, but then you are still going to pay a big dividend, means the company will have to borrow money. Now, when you have situation where a company suddenly announced paying a good dividend despite having losses, you should not buy that company. Okay, because whatever they pay that dividend is not enough to pay for your entire investment in that company. Okay, so don't fall for that, because normally if you have a situation like this, it is the top management who are going to cash out. Okay, they want the stock price to increase so that they can cash out. Okay, their investment. So when a management focus too much on the price action, they would lose focus on the very basic necessities of improving that company in terms of productivity, efficiency, and the bottom line. Okay, so be careful about all this. So then, of course, risk of investing in a turnaround stock. Company may go under or fall into bankruptcy if new strategies to arrest the decline fail. Now, this is the one thing you need to be really clear. Okay, when you buy a stock, okay, at the very near the very bottom, okay, it may not necessarily shows that the turnaround plan is going to be successful, but then the risk will be higher and so will the return. Okay, but if let's say the new strategies are not able to arrest the decline, okay, then it falls further and potentially it could wipe off your entire investment. Okay, especially when that company has reached a stage where there's no other option but to delist. Okay, then of course the opportunity cost in holding the investment for a longer than projected period, because a turnaround plan would not happen in 1 or 2 quarters. Sometimes it could last 2 to 3 years. Okay, to really see the fruition of your investment. Okay, but of course during the intermittent stage, from there to that potential, there's ample opportunity to trade if you are not a long-term investors. So during the restructuring process, there could be more dilution of shares. Yeah, because the company need to, if a company is already heavily indebted, there's no point for that company to borrow at an interest rate, okay, to pay off debt, which also requires interest rate. So what will likely happen, that company will issue more shares, okay, to a new investors, or they will issue more shares to actually pay off their debt. Then there'll be a lot of dilution, okay, and the share price could be pressured very, very low. Okay, because normally in a restructuring process, if the company is heavily indebted, there's no other options except to dilute the shareholding base. Yeah, okay, so you can see your investment fall further in terms of dilution. Okay, then of course there's emotional stress, as things could become worse before they become better. So during the initial stage, there could be a lot of roller coaster kind of emotional stress here. Sometimes you think that it's on the right track, but then certain things comes in, because there's a whole there's a whole lot of problems when the company is at rock bottom. Okay, when the management may overcome, a few in that specified deadline, a new problem may crop out later. Okay, so it could be tremendous emotional stress when you're holding on to that particular stock. Then the rewards of investing. Okay, during the restructuring phase, any dilution, of course, is an opportunity to buy, allowing the investor to accumulate shares at low value. Yeah, the transformation could result in the company changing its business model, exposing the company to a whole new market or opportunities. So sometimes a company may see that an opportunity, okay, may arise, and then that company may decide that, hey, let's shift our attention into this segment. Okay, so then they will actually move their resources to that segment and grow that segment. Okay, and which sometimes may be a good strategy because it opened up a whole new market of opportunities. Yeah. Then the returns, of course, could be astronomical as the company swings from loss to profit ahead of schedule. So very importantly, the share price could actually move up quite fast. Okay, if let's say whatever the management did, okay, well, actually is whatever the management does is always ahead of schedule. Okay, and they are able to actually deliver good results. Okay, projected supposed to be by the fourth quarter of the year, they are able to move into positive territory by the second quarter of the year. So then this could actually move the share price very quickly. But to do so, the management need to be very dynamic. Yeah. So how do we identify a turnaround stock? Of course, you have to look for signs of a turnaround. Then, okay, there's emergence of optimism from a prolonged bear market, which could change the fortunes of a company. Okay, so just now we talked about MAYBULK. So would actually the commodities index moving higher, could it, change the fortunes of MAYBULK? Later we'll discuss. Okay, or when the new management takes over or the removal of previous key personnel such as the CEO, CFO, or COO. Okay, so normally when the older management from the previous batch are removed, then it's a sign that the company wants new blood into the business, into managing the company. So then it's very important that this new management team offers a new turnaround plan and vision is reviewed. Okay, they must tell the investors what is their vision. Okay, they set deadlines for achievement of specific targets rather than just saying that we will do this, we do this. Okay, a lot of smoke and mirrors, but then there's no specific dates. Okay, so improvement in earnings and balance sheet must be proven to be sustainable. Okay, so like I say, it must not be just 1 or 2 quarters. Okay, but then it's followed through to the third, fourth quarter, and then the following financial year. Yeah. Very importantly, a turnaround stock must be supported by financial data, not the price action in the stock, because the financial data are the underlying fundamentals. Okay, sometimes that price action could be a lot of could be just enthusiasm. New management comes in, that's an enthusiasm that it would actually able to turn things around. Then you see a sudden spike, but then after a while, okay, the financial data does not support it, and then you see the stock price fall back again. Okay, so very importantly, okay, the financial data must be consistent. So let's study MAYBULK and M3 Tech. Now the revenue growth, okay, for MAYBULK is 24.6%, okay, year on year. Okay, M3 Tech is still negative. Net loss reduction year on year. Okay, MAYBULK able to reduce the net loss by 35.1%. M3 Tech 41.6%. The current ratio at 0.72. M3 Tech at 5.68. Now here you see that M3 Tech has very strong current ratio and they have very low debt to equity ratio. Okay, whereas MAYBULK, their current ratio is is not enough. Okay, the current assets not enough to meet that 12 months commitments here, but their debt to equity ratio is reasonable at 0.45. EPS not able to give because it's negative here, not applicable here. Dividend also not applicable. Share price, MAYBULK at 84 cents, M3 Tech at 10 cents. Dividend yield also not applicable. Net asset value per share, okay, MAYBULK is 0.63, M3 Tech is 0.09, okay, 9 cents. So we have the share price over the net asset value per share for MAYBULK at 1.33 and M3 Tech at 1.04. P ratio not possible, not applicable because it's negative, it's not positive. Change in operating cash flow, both are positive. Return on equity, MAYBULK return is negative here, is 13.1%, whereas M3 Tech at 3.36%. Now, on paper, it may be seen that M3 Tech has a stronger balance sheet, but let's explore a bit further. Now, if we use a KPI measurement, okay, the revenue growth year on year must be more than 5%. M3 Tech fails, but MAYBULK able to achieve more than 5%. Net loss reduction, okay, more than 10%. Okay, net loss reduction here supposed to be more than 10%, which MAYBULK is a yes, and M3 Tech is also a yes. Okay, current ratio of more than 1. Okay, MAYBULK fails, whereas M3 Tech pass. Debt to equity ratio less than 1.5, both pass. Dividend yield, neither have any dividend. Net asset value per share less than 3, both are actually below 3. Okay, so MAYBULK and M3 Tech have the same score of 4 yes and 4 no, but which is a better company. Now, very importantly, that KPI measurement is something like a methodology, a quantitative method. Later on, you need to dissect. If the score are the same, you need to go deeper into the details, okay, and study the underlying fundamentals. For MAYBULK, price recovery in commodities and raw materials, at least we see it in the commodities index. Gains in the Baltic index, which is edging towards 1,500 points from a low of 291 in February 12. Okay, so you can see that the shipping rate is improving, okay, and at 1,500 points is a far cry from 291. Okay, then we could see further improvement in revenue and reduction in net loss, okay, because of improving shipping rates, okay, and recovery in the commodities market. Okay, Q on Q, quarter on quarter improvement in revenue and reduction in net loss. Okay, debt to equity ratio is low. Allowing the company to borrow to meet its current liabilities commitments. So its debt to equity ratio is not very, it's not staggeringly high. So that would allow MAYBULK to actually borrow to meet the current liabilities commitment. Okay, and that's support in the share price. So M3 Tech fundamentals. Okay, technology-based business are often competitive in a cutthroat manner, requiring high volume of sales to turn in a profit. Okay, this is what happens in a lot of technology. Yeah, you have to go for high volume because the margin is normally squeezed. And not only that, when you have certain technology improvement, whatever items that you have of a lower technology base, they would actually be obsolete. Okay, so quarter-on-quarter result remains murky with increase in revenue and net loss. So on one hand, revenue did increase quarter-on-quarter, but the net loss also widened. Yeah, continued disposal of large quantities of shares by insider is not inspiring, nor confidence boosting. Yeah, there's a lot of disposal of shares by the insiders in the company. So if let's say the company is really doing very well, why are the insiders who are the major shareholders, they are actually disposing their shares? Okay, so this is definitely something that is not very inspiring, yeah, for investors to buy into the company. Okay, and not only that, the management did not reveal much about the mobile platform business nor plans to increase users in their quarterly report. They tell a lot about their display platform, their display equipment. Okay, but because they also have a number of mobile apps, you know, they never say anything about it, how to increase users and so on. So when it's only hype on something that, you know, that is their best seller, okay, but not other segments of the business, then I think that, you know, it's not very confidence boosting either. Yeah, you know, if a company is really doing very well, you know, it should not be doing well in just one segment. It should be doing well in a multiple of segments. Okay, so when you just have one segment that suddenly you say this is your most important segment, you know, you are looking at boosting its sales and so on. Okay, but because you also have a lot of mobile platform, but there's nothing, you know, in the report that reveals what the management wants to do to increase its users. So is it that the management is changing their focus? Okay, so this has more questions than answers. So in this case, okay, I would look at MAYBULK as being a more promising characteristics of a turnaround stock. Okay, but one thing, because the commodities market may be choppy and global economy could return to recession level due to the immense money printing and unsustainable debt, it is best to adopt a careful approach. Yeah, although the commodities market is showing some improvement and the Baltic index actually is showing much higher shipping rates. Okay, bear in mind that worldwide, okay, the global debt, you know, has already reached the highest on record. Okay, and there's a lot of money printing going about, and there's a lot of asset bubbles throughout the global market. So if there's any severe correction, then that could impact the economy quite drastically. So if you are interested in MAYBULK, do monitor the Baltic index as guide for the price action. Yeah. So key points in investing in a turnaround stock. Revenue and net profit may fall, or even net loss may occur, but what keeps the company afloat is its financial strength. Okay, always remember that. Study the balance sheet, ensure the important ratios are not raising any red flags. Yeah, so fundamentals must improve and financial data must indicate improvement, not the price action in the share price. Okay, look for improvement in the financial data. The share price improvement comes along with the improvement in financial data. If let's say the financial data does not support that improvement in the share price, means something is wrong, and it could be due to over speculation. Yeah, so the last thing is be patient. Okay, Q&A session.
Okay, so we have come to the Q&A session. So we are now opening the floor for questions. All right, so if any question, you can put it down, and in the meantime, let me take back the control PC. All right, so the first question that we have here is, what percentage would you recommend to allocate for a turnaround stock in a portfolio?
I think if you are looking at potential return of multiples, you need not invest a very huge amount as a percentage of your portfolio. It depends on the risk taking, but assuming that a turnaround stock can eventually deliver, let's say, 2 to 3 times, then maybe a 10% allocation would do, because when it really turns around and you see that multiples in gain, it could transform a bigger portion of your portfolio. So don't go too heavily into it, okay, because the risks are still there. Yeah. I would suggest at around there, but again, it's up to you whether you really find a very good turnaround stock and you want to add on to your investment gradually. Okay, so initial stage, okay, maybe.
Okay, so can you compare MAYBULK with its competitor? Likewise, can you also compare M3 Tech with its peers? Hello. So to sum up, I think what he meant is that it depends on the risk-taking ability for allocation of turnaround stock on your portfolio. If you are a bit more risk taker, of course you can have more. If you are lesser of a risk taker, you can have a bit lesser of the portfolio. Oh, PC, are you back online now? All right.
Yeah,
so
yeah,
go
that's
on.
slight disruption. Yeah.
Yeah. Are you okay? Have you done with the? Are you done with the first question? Okay, then let me go on with the second question. Can you compare MAYBULK with its competitor and also entry tag with its peers? That's the next question.
I think most importantly, sorry.
Yeah, that's the question.
Can
Would
you
you be able to
repeat the
compare?
question?
Would you be able to compare MAYBULK with its peers and also entry tag with its peers?
I think yes, you can compare. Okay, with peers within the same industry, but here I'm just drawing out a single stock. But if you really want to compare whether which of the, for example, MAYBULK growing at a faster rate compared to other peers, then if so, then that would actually reinforce the attractiveness of MAYBULK. But if let's say other peers are performing better than MAYBULK, then you might not want to put your money into MAYBULK as yet. Yeah, this is just an example. Very importantly, you need to compare with other peers.
Okay, so the next question is, what measurement can indicate a strong possible or turnaround stock other than financial report and chairman analyst report?
I think the financial report will always be something that will tell you the underlying fundamentals. But if let's say you want to look at certain change, okay, for example, like those that are related to certain other indicators, for example, like I share with you MAYBULK, okay, for example, an uptick in the commodities market, an uptick in the Baltic index, then that would immediately transmit the indicators that you wanted to know, okay, that the industry is actually improving, okay. Just as for example, if you are if let's say in the assuming at the bottom there's a property market crash like during the year 2008, okay. So what do we know that there'll be a boost in the property market? So when the central bank, Bank of Ghana, decides to lower interest rate further, so then this might be the kind of indicator that shows that, hey, you know, it will actually support the property market going forward. So look for those external indicators as the prime mover. Yeah.
Okay, awesome. So hang on, yeah. So usually for the deadline, how long time does it take to achieve the specific result? Is considered like acceptable for the turnaround stock?
I think the much depends on the current economic situation. For example, if let's say it hits the like right now, there's a lot of asset bubbles everywhere. So if let's say there's a huge correction, money wouldn't just disappear. Okay, money would move into certain areas that are actually in a bear market. So that's why there's a lot of economists and analysts are saying that if let's say there's certain huge correction, okay, most likely it will move into those industries that are currently have not reached an asset bubble yet. Okay, most likely in the commodity industry. Okay, or in the next if the next bubble bursts, maybe money will flow into emerging economies. So these are something that you can think about, okay, and look for certain pointers. Yeah.
Okay, so is DRB Highcom considered a good candidate for turnaround stock?
Most importantly, look at the coming financials. Yeah, because there's a lot of shift in the recent news. Okay, but to look for certain indicators, for example, better sales or better or a reduction in the expenses and all those as the first signs of turnaround. Yeah, it must be some improvement. Okay, not just rely on the news that comes out.
Okay, So the next question is, how many quarters of improvement do you think would be reasonable before you take a serious look at the stock, and how do you do evaluation for such a stock?
If let's say we will never know the bottom, okay? So that's why you will own, if let's say if you are scanning certain stocks, yeah, if the price action dictates that shows that the stock is coming out, okay, from its bottom, then you might want to look deeper into this stock as a potential turnaround candidate. But like I say, the price action sometimes can be speculative and not due to underlying fundamentals. But use the price action as something to help you decide which stock that you that you should start your analysis. Yeah.
Okay, so sometimes even though the stock meets all these turnaround criteria, but the share price drop further as the market doesn't have an eye on the stock, what should we do?
Very importantly, you need to have that kind of again, the financial data. Now, sometimes a company that is fallen down to the bottom, okay, they might show improvement in their financials, but because it has been in the bottom for so long, investors are just not interested. Okay, so that share price, despite its fundamentals are improving, may not see any retail participation or even institutional participation in buying into that stock. Okay, but I think if as long as the fundamentals are there, it will, it will actually grow in terms of equity and so on. And sooner or later, people would, institutions and other investors would come in and support it. So if let's say that particular stock is very low value and and it's supported by strong fundamentals, then that could be your value stock. Okay, instead of a turnaround stock, it then becomes a value stock already. Okay, so you have to, there could be this kind of change. Sometimes when a company has been doing badly for consecutive quarters, people just lose interest, and that is the opportune time for you to buy into that company, just as the fundamentals are showing important indicative signals of improvement. Yeah.
Okay, so how closely is Baltic Index correlated with the commodities? Are there any example of other influences for other category of stock? For example, property, like what index correlate with which property and what index correlate with technology, etc.
More specifically, because the Baltic Index is after all about shipment of dry raw materials in the commodity market. So that's why the tool would actually give you a better indicator. Okay, so if let's say a particular company that is doing very poorly, okay, let's say in the vehicle, in the auto industry, okay, in the vehicle industry. Now, then one thing that you should look at is what is the volume of car sales, okay, that comes out, and where this particular company rank in that volume. Is it majority are actually foreign owned, or the local brand actually is is somewhere in somewhere on the top 5? This will be indicators. Yeah, so always look for those reports that help you to make a better decision. All you need to do is actually Google, you can Google for whatever data, all sorts of things will come out. Yeah, you have to be an active participant in doing the research, and not just rely on newspaper telling you something about it. So if you have certain interest in a particular stock, do find out all about it. Okay, so for example, if let's say there's in the technology sphere, okay, read as much as you can. Okay, what are the new what are the new technology? Okay, if that company is in the e-commerce, who are the big players that are coming in? Okay, then you will be able to have some indication. Yeah.
Okay, so the next question is on do we have a sector that is quick or that is slow in turnaround during economic turnaround or not? Do you understand the question?
Yeah, I
Like any
think
other sector that responds quickly to the turnaround, and any sector that responds slowly to turnaround in terms of economic changes.
If let's say there's I think the commodities market is something that will show a very quick when it starts to move up. Yeah, for example, the bear market in the commodities, is almost 2 years, but as it moves up, okay, certain commodities are actually moving up very, very fast. Okay, so things like so that's why when you look at the commodity index, you can go to certain materials that is related to our country's economy. For example, oil palm, okay, things like steel, things like for example steel. Then you would know that, hey, would it impact Malaysia's steel business because steel price is actually moving higher. Okay, so these are the things that you can look at. The commodity index is something that that is been very badly hit, but there are certain commodities that have actually increased in prices over last year by 30 to 30 to 100 over percent, especially. But I don't think Malaysia has. But then because of all the hype on electric vehicles, lithium is actually up 100 over percent versus last year in terms of price. Then cobalt, because it's related with lithium battery, cobalt is also have moved up 100 over percent. Okay, so look for a certain breakdown that you think that that certain price is moving up very fast. Then of course that share and that company which is involved in that kind of industry will also move up very fast. Okay, try to relate to that. Yeah.
Okay, so where can we search for the Baltic Index? Is it global crude oil price and transportation index is relatively important to MAYBULK as well?
Okay, the most important thing is related to MAYBULK is actually the Baltic dry bulk index. Yeah, because MAYBULK is actually a dry bulk carrier, not the oil carrier. Okay, but if let's say you want to look at things that's related to oil, that would actually shows that the oil industry is recovering on something. So oil price actually have now moved up. So you can look at which are the segment that has been hammered during the last 2 to 3 years. Okay, for example, now this we will talk later when we talk about oil and gas. But then as a prelude, like Sapura Energy, okay, or Dialog. Okay, Dialog is more into the storage. Okay, whereas others could be into the deep oil drilling. So those that related into deep oil drilling would be somewhat affected. Okay, because a lot of companies are cutting away their capex in exploration, but Dialog, because they are in providing storage for oil, as long as the oil price increase, then the oil storage price will also increase. Yeah, so something like that lah. Yeah.
Okay. In terms of gearing and debt to equity ratio, which figure do you consider reasonable for turnaround companies?
I think debt to equity ratio should be less than 1.5. 1.5. Why? Because even better if let's say you can put it at 1, because the as long as the gearing is maintained below 1, okay, it greatly reduces the risk. But because companies often would actually borrow money and leverage, so I often use the figure of 1.5. Yeah, but the current ratio must always be more than 1. Okay, because there must be the kind of current assets that they have must be more than sufficient to meet the 12 months commitments in the current liabilities.
So the next question is on what is your thought on investing in a company warrants instead of shares? Do they both work the same way? And what are the risks?
I think for warrants is because there's an exercise expiry date. And it is very low price, and sometimes people get burned also because of the small price movement. They have to buy a big quantity. Then again, I would this again is my own opinion. I prefer shares rather than warrants and all those, because I want something that can give me a dividend. Yeah. Okay. So it's entirely up to your own assessment of risk.
All right. So what are the key points that we have to look at in the financial data in order to determine whether it is a potentially turnaround stock or not?
I think you have to look at now, very importantly, you have to look at quarter-on-quarter improvement. Okay, because and if let's say the company is improving, it will always be better than last year. But but to really show that this company is for consistency's sake, you need to look at quarter-on-quarter. For example, Q3 should be better or equal to Q2. Okay, and Q4 should be better than Q3. Okay, certain consistency that shows you a growing trajectory. If let's say for a certain quarter it may fall short, then the next quarter it should actually be much better. Okay, then that shows a trajectory of improvement and consistency. Yeah.
You mentioned about big brands on clothing coming to Malaysia and about Padini. How does this tie in with the topic of tonight?
I think a lot of Malaysia retailers are still what I mentioned just now is that just a comparison, okay, that a lot of big brands are coming to Malaysia, but not many Malaysia brands are actually moving overseas. Therefore, competition would be very intense, okay, and certain Malaysia retail companies may have a cap on their potential for further improvement because of that intense competition. Okay, but not necessarily it relates to Malaysia industry being at rock bottom, because a number of retailers are still doing quite well. But just to show that competition can actually one day force those companies into stagnation, okay, because of the intense competition. Yeah.
Do you ever look at interest cover? That was another question.
Not really. I think most importantly is that if the company fundamental is strong, okay, then your decision would be a less risky undertaking, okay, to invest. Okay, it boils down to everything about financials. Yeah.
Okay, sure. So what do you think is the difference between investing in turnaround stocks and cigar butt value investing?
Now, one of course is definitely higher risk. Okay, turnaround stock is definitely higher risk because you do not know whether your decision to buy at the near bottom is correct or not. Like I say, the risks are very much higher. That company can still fail to meet its objectives. Okay, that is why going back to the first question, if you have identified a turnaround stock, allocate just a small portion on it, because likelihood the multiples will be much higher, and therefore they can form a significant portion of your portfolio if let's say the company managed to deliver the desired results. Now, value investing is something that you want to see long-term growth, okay, with steady dividend. Okay, in a turnaround stock, in that 2 to 3 years until you see that kind of assuming assuming it's able to meet its targets, it still need about 2 to 3 years before you can see that kind of results. Yeah, okay. Whereas in a value stock would, during those 2 or 3 years, they still be able to give you a dividend. Yeah.
Okay, so what is your view on the current trend of oil and gas industry and related counters?
The oil and gas industry has seen some improvement, okay, in terms of pricing. Also mainly driven because of the Russia and Saudi Arabia talk about reducing production. Now the price would not go much higher. I think it will roughly remain around the max, maybe about 55 in the medium term, to maybe about 60 at the max. But in 2018 all the way to 2020, there'll be a lot of bankruptcies in the oil industry, especially in the US, because a lot of those companies that invested in the shale oil, they have incurred tremendous debt. About 80% of their cash flow is used to finance their debt. Okay, so it's just so bad. Okay, now come 2020, there'll be 200 billion of bond from this shale industry that will become due. So many of them could be financially distressed by that time. So in the short term, if let's say those counters in Malaysia that are directly linked to oil exploration, those would be much. You won't see tremendous price appreciation, okay, until such time that the shale industry in the US go bust, and then that would remove many millions of barrels of oil per day from the global market, and that could cause oil to move up higher. But it is still about 2 to 3 years away. Okay, so if you are investing in oil and gas counter, you need to have that kind of patience. But it is at this kind of price that gives you the better value for money going into the longer term future. Yeah.
Okay, excellent. So how do you do valuation for turnaround stock?
Most importantly, I often rely on the management. Now, initially, if let's say I want to move in early, okay, and if let's say I'm a risk taker, okay, I would see what the management intention are, what do they want to do, okay, how they want to do it, okay, and then they set a target. Now that is the first stage that normally you see management is serious in wanting to turn things around. So based on that, I may want to make that initial investment, okay, but I know that I'm taking a big risk because things may not happen, okay. Then if let's say fundamentals are showing some signs, then I will add on to my position, because initial position, if I lose, I lose, okay. But at least I will face up to that risk that I'm taking. But when financial data are showing improvement, then that's when I will accumulate more, okay. But I would not keep on buying all the way up. It will be a certain time when I think, okay, it's enough. I don't think I want to invest anymore. Now it's just to watch it grow. Yeah.
Okay, so is quarter on quarter earning per share or year on year earning per share improvement more important to you?
If let's say I'm looking at a very steady company, okay, I would look at year on year, okay. But in a turnaround company, there must be a trajectory of improvement, okay, quarter on quarter, because you want consistency. You want to see for signs of consistency, okay. Not that, because if let's say things are already changing, every whatever quarter this year would be better than the previous quarter, definitely. Otherwise, you better dump the stock altogether. That definitely will be much better. Okay, but the thing is, when improvements start to show, it must be showing an upside trajectory rather than a stagnant trajectory. So that's why quarter and quarter then becomes very important. If a very big company, okay, very steady financially, I would normally compare year on year. Okay.
Okay. So, do you have any example of the property turnaround stock? That's another question.
I don't have any example right now. I think that's the property market in Malaysia is currently still well supported. We have not seen the kind of decline like we did in 2008. And until such time happens, then there'll be a lot of opportunities. Yeah.
Okay. So, for technology stocks, how do we make comparison considering that there are so many tech stocks?
That is why when it comes to technology, I don't really invest in a lot of technology is something that I try to avoid. Okay. Why? Because it's a very fast changing kind of environment, and the only type of technology stock that is worthwhile investing are the giants. Okay, because they have the kind of money and they have the kind of ability, okay, to change things, to change trends, to change the technology. But if let's say you are a small cap company, for you to change technology, okay, needs a lot of capital, and unfortunately a lot of small companies, they don't have that unless there's a big investor. They have a very brilliant idea and a big investor comes in and, hey, I'm going to pump in few 100 million. Okay, but such things are very rare in this country. Okay, and that is why Malaysia technology stocks are something that when compared to the worldwide giants, is something that I'm quite I would say my own opinion that the risks are stacked against our companies rather than having something to go for them. Yeah.
Okay. Yeah. So there has been a conflicting definition of debt to equity and gearing ratio. So the question is on what is your definition? Is it debt to equity ratio is equal to long-term debt divided by total equity, while gearing ratio is equal to total liabilities divided by total equity?
Okay. There are some that define it differently. Okay. Some people say it's long-term debt divided by total equity. But for me, I often use total liabilities because when it comes to liabilities, I do not want to have certain things that exclude this part of the liability and so on, because the total liabilities show the extent of the damage. So it is a worst case scenario that shows the total amount of liabilities. But if you start to exclude certain items, then that doesn't show the real picture. So that's why you have to be very careful. I prefer to take the approach of total liabilities. Yeah. Now the other thing is again, previously people have asked before. There's also a lot of measurement that is based on EBITDA. EBITDA is something that I totally avoid because it is earnings before interest, depreciation, taxation, and amortization. Yeah. So when you borrow money, that's interest. You cannot say that I decided to use EBITDA, okay, because it gives a better picture. No, when you exclude interest, it's something that you already take out as a burden, okay. What we need to do is to analyze things based on everything thrown in to know what is the extent of the damage. Only when you know the extent of the damage can you be able to see whatever things that management does, and if positive, is moving away from the extreme case. Okay, but that's why EBITDA is not accepted as in the GAAP accounting, the general accepted accounting practices. Okay, it is something that company used to sell to the investors because they have a lot of debt and their interest is very high. Okay, so they say that our EBITDA is how good. Okay, but because they are so burdened by debt, so that carries an interest. So that's why they prefer to use EBITDA. So nowadays, a lot of companies, they use EBITDA simply because they want to shout about it and not to tell the world that actually their earnings are very bad. Okay, so these are the things you should be watchful for.
Yeah. So so the next question is also on what are the sunset industries that you would avoid at the moment?
I think the kind of sunset industry has to do with printing, okay, because we are moving fast into the digital age. Okay, now very interestingly, there's an article I read, or just glance through, that that banking may be a sunset industry, not now, okay, but further down the road, simply because of the blockchain technology. Because of the blockchain technology, everything is ledgered. Okay, we don't require a bank because banks would one day becomes obsolete. Okay, this is a very interesting thing, but I'm not saying that it will happen. But some technologies and economies are predicting that. It's just like because of the evolution of electrical vehicles, maybe a few decades down, okay, the oil and gas industry may be a sunset industry. Okay, so because of whatever industry that changes, okay, has a lot to do with improvement in technology and in processes. Yeah.
Or even oil and gas. Okay,
Yeah.
cool. So do you
because by 2030, a lot of European countries would be strictly electric vehicles. Okay, and US, they have not set any deadline. China is setting a deadline. Especially China just recently mentioned that they are going to set a deadline to ban fossil fuel vehicles in China. Now, China has
I think I read about that.
200 million vehicles. Can you imagine that? How the oil and gas industry will be depressed? But thankfully, oil and gas still have use because they are used in a lot of manufacturing. For example, plastic, fiberglass, paint, and all those. Yeah, so it won't definitely die, but actually, oil would then the demand would, move up in the next few years. Then it will come down towards the 2030.
Okay. So the next question is on: do we get informed earlier before the dilution of share? Is it the same like rights issue, or do we get to buy the cheaper diluted share?
Okay. Sometimes the company may issue rights issue. Okay, and sometimes it could be a private placement. So which means if let's say there's a huge investor that comes in, okay, the company would just issue a share and inform the shareholders that they will have this private placement of how many shares to this investor. Okay, and it may not come with a rights issue. So actually it depends. Definitely the company will announce it. So if let's say it's a private placement, if let's say the share amount is huge, then definitely the dilution would be very great and the share price would be further depressed.
Okay. So the last question is on: what is the percentage of insider consider safe to invest in turnaround stock? Well, I guess it's the insider news or insider buying.
I think insider buying would be the best indicator. Yeah.
Like what?
Because management, they would know that the company is doing well. And if let's say there's any significant announcement, sometimes Bursa would come out with announcement of significant shareholder or something like that. Okay. So if let's say the persons in the board of director, they are starting to accumulate, that means that they have confidence in that company, and that should reinforce your confidence in that. no one in the board of directors is bailing out. They are not disposing share. Rather, they are accumulating. So this is a good sign.
Okay. With that, we have come to the end of our webinar today. So yeah, thank you so much for all your time. And with that, I want to come to the next slide, which is next webinar. Some of you asking about sunset stocks, and to answer your questions, next month we'll talk about how to identify sunset stocks. Now, sunset stocks are those stocks that are in which are not in a really good industry. For example, like maybe newspaper printing, like what PC said earlier, the printing industry. And then maybe next month we'll dissect what are the sunset industries.